Brandon Buchanan is the founder and managing partner at Meta4 Capital, where he invests in the immersive internet, focusing on non-fungible tokens, or NFTs, and how blockchain technology can reimagine capital. Prior to founding Meta4, Brandon co-founded Iterative Capital Management, a firm specializing in cryptocurrency mining, and worked as the chief operating officer and general counsel of Metamorphic Ventures, a venture capital firm pursuing early-stage technology companies. He's in town this week for NFT NYC. It's a huge NFT conference, and we're super excited to have him here today for a little bit of Q&A. So let's dive right in. Brandon, how would you explain Web3 to a fifth grader?
Yeah, and thanks for having me, Clayton and Titan team. Web3, I think of it as just a decentralized internet, right? So for folks who've grown up in this sort of digital world or internet world, when you think of Web 1, back in the day, all we had was like GeoCities or Yahoo. In essence, you were just looking for something on the web. You could do a search. So they call that like read only. Web 2, we've had things like applications where now you can search for an Uber, you can search for Postmates, you can order things, so you can read and write. With Web 3, you actually own your digital content. So in essence, it's an evolution on the things that have happened in sort of precursor internets to where we are today. So for a 5-year-older, I would just say that Web3 is about owning your digital content, your digital self.
I mean, if you zoom out and think back, what was the first aha moment? When did you first have the realization that Web3 could be the third generation of that kind of read, write evolution? And if it was a specific moment in time, was it a series of experiences over time that really led you to that?
Yeah, for me, when I was working with Metamorphic Ventures, we would see a ton of companies that were coming in. I think at the time the thesis was, because the GP there, David Hirsch, he was a ex-Googler, I guess what they call themselves, ex-Google. And so his thesis was around investing in companies that had also been at Google. So we were meeting a ton of companies who were approaching solutions by doing mobile first. So we were investing in, kind of companies that would ship dog food or do shipping, like a company like Boxby. And for me, like that wasn't as exciting as some of the other companies that were coming in, but that weren't part of that investment thesis. So there was a company that came in by the name of CoinSetter. The CEO there was Jaron Lukowicz. And at the time, he was doing a Bitcoin exchange. And in 2014, there really weren't that many. I think there was obviously like Mt. Gox that had its whole fiasco, and a couple others. But he had this sort of like really kind of interesting idea that Bitcoin was going to revolutionize payments and a lot of the ways that we sort of function. So Bitcoin, I think, as sort of like the gold standard, if you will, in crypto, set the stage for what we're seeing today with Ethereum and other layer one networks. And so, the aha moment for me was, government regulations, whether it be for banking or, securing, individual users' capital, like with banks, they don't have the ability to do a lot of different things. So I'll give you an example. If you're going to send a wire to a friend, you can't do it after 5 p.m. There's probably a number of reasons for that, but you can't send a wire. You may be able to send a Cash App, a Venmo, or PayPal or whatever, but doing a wire transfer, you can't do it. It operates on the SWIFT network. It has its own system for doing it. Mm-hmm. With cryptocurrency, it's a peer-to-peer platform. You're able to send it, to your friends. So the idea for me, or the aha moment, was like, wow, like cryptocurrency enables so much. Like I can control my own accounts. It can't be, taken over by the government. If I need to send something to someone else, it's faster, cheaper, safer. And so that was kind of like the first light bulb, being my own bank, right? And I thought the implications of that, for people that need to do remittances, like folks who want to send money back to either Mexico or Africa, I thought in this sort of global digital world that this was kind of the trend that we were going to see. Mm-hmm. So that was kind of the big light bulb. And then, obviously, where we are today. I mean, I think owning your digital content makes so much sense because we've seen a company like Instagram or Facebook where you download or you put your images on there, you don't own the content, you're getting fed advertisements, and now in Web3, you actually have the opportunity to own the content that you're putting on there. And so I think we're going to see a great transition from folks going from Web 2 to Web 3 once they understand it a little bit better. And we kind of see it with intermediaries like OnlyFans or other products that have these sort of gatekeeping functions. I forget the other one that does is it Substack for as opposed to just putting something on Medium where you actually own the content that you're putting out there. So not to say that the Web 2 platforms aren't great from a funnel perspective and being able to market and put yourself out there in the beginning. But in terms of monetizing, I don't think there's a better way than blockchain and Web3. And so for me, Chris Dixon says this all the time from A16Z. He thinks that the Web3's opportunity is Web2's take rate. So whereas like you, the consumer, you don't get anything but a like symbol or a verified check. In Web3, you're actually getting tokens or some other remuneration. So.
I love that example. I mean, just going back on that thread, you mentioned Web 2 and Chris Dixon. If you rewind the clock and you take a step back, Meta4 is a Web 3 investment management company. You're investing out of an NFT fund. If you think back to Web 1 and Web 2, the first chapter, so to call, was investing in the thing that basically flipped the switch online, right? So I think it was Web 1, Web 2 is really a race to flip on the switch of getting plugged into the internet. Right? And then that unleashed a wave of innovation around building applications, building websites on top of that, which then enabled online commerce and so forth. If you're thinking about Web3, before we dive into NFTs, what are the sorts of themes specifically you think are highly investable, but still nascent and maybe misunderstood? Any examples come to mind? I know you mentioned some of the Substack and OnlyFans where you can sort of take back ownership of the content, but any specific themes you are excited about at Meta4?
Yeah, I think as we enter this digital world, obviously the picks and shovels, the onboarding to be able to convert your dollars into currency, we still need better user experience around that, right? I think it's still too clunky for the average consumer user, where it almost feels like you have to know a little bit of coding even though you don't, right? So you have to have a cryptocurrency wallet and you have to have an exchange account and you have to do all these other steps that really kind of prevent the average consumer from entering into the market. But we see that kind of changing, right? Whether it's an app like Titan or whether we see it with Robinhood or other competitors where they're now trying to incorporate crypto. But the real opportunity I see is for things like gaming, which are multi-billion-dollar industries, right? Whereas so if I'm playing Fortnite, where I actually can take the skins or the weapons or whatever that I'm using in the game, and I can port them either over to another game, or I can own it and sell it to someone else. I can rent and lease it. But now I'm an active participant in that ecosystem, as opposed to me just sort of paying with digital dollars and not being able to really do much other than play. So I think gaming is going to be a big one. I think identity and verification. One of the beauties of blockchain technology is that you have this distributed ledger that allows everyone to see in a very transparent and immutable way of what's happening, right? So using that technology to confirm identity on the web is important. We all see it, from bots to fake accounts to people that may mimic Titan or whatever. It's a real issue that needs to be confronted, and we see it on a lot of the Web 2 platforms. Specifically, I think Twitter and Instagram have this issue that they need to combat. But having that identity aspect, I think, is going to be a big one for crypto, specifically for Web 3. The other is how we form communities and how we actually do things and push things forward. So I think from nonprofits, I think from fundraising, I think all of those different sort of verticals, we're going to see Web3 kind of play an impact in that. And so we'll see which local and state governments kind of adopt new standards for how we recognize some of these entities, because it's still the arbitrage right now is sort of like what the political risk is with some of these crypto nascent technologies and communities are doing. But I guess the idea is like, what is it going to look like when we can form a DAO around a common interest that we have, whether we like playing basketball or we want to help homeless folks or we want to provide capital to prisoners who can't pay for their own counsel. What are the things that we want to rally around as communities and how we're able to vote on that? Web3 allows you to do that through different mechanisms like decentralized autonomous organizations, DAOs. So there's so many kind of different applications that I think are interesting and specific to Web3. But again, it all goes back to the first point that all of it is still early, right? I mean, I think people see the prices skyrocketing up and down, and that happens in traditional venture world as well, right? I mean, a company will raise a seed round, and maybe 2 years later, they raise it 50x more. So it's not surprising to see, for a liquid market like crypto, that goes up and down, up 10x, down 90%, up 50x, down whatever, right? So it's important for people to remember that we're just sort of in the early innings of all of this. We're onboarding new talent, folks who are moving from banking and tech and art into this sort of sector. They're understanding the technology. And yeah, I think the use cases will continue to grow in the same way that you're saying, like sort of with Web 1. I think back in the day, I think we were using Netscape or AOL or whatever it was. I had my dial-up internet, and I couldn't do much other than, do a search for a word or something, right? And then I think eventually that evolved with, brilliant people coming in and building new web pages, building things like Amazon, building things like eBay, where now you have e-commerce, and then on top of that, you're building things. So we're in the very, very early stages. I think Ray Dalio made the comment that he believes that we're, in a paradigm shift, and you don't know it until you're kind of already through it, right? So if you think about it sort of in 10-year time frames, I think we've just hit the 10-year anniversary of Bitcoin, really this past year. So, and it just hit sort of popular culture really in 2017, 2018. So I think we're in the very early phases. People are still understanding the technology. The government is still wrapping their head around it. And, we're in a global digital world, and I see big upside, specifically from things being built on top of it. Like take potential capital appreciation out of the equation. What is the world and system that we want to live in, right? Like, what do we want our internet to look like? How would we re-architect the world in a way that allows access and enfranchises people to do great things? I know you as a technologist and with your app, you see the power of really kind of just like one idea, right? And what that can turn into. Enabling people who otherwise wouldn't have access to investing, they're able to do it through Titan, right? So I think the same thing with crypto. I think people are going to be building amazing things, not just games, but actual tools that empower. So it's a long-winded answer, but I think...
No, it's incredible. I'd love to tie together two things you mentioned. One is you talked about Bitcoin, crypto really only entering at least the institutional and mass retail investor zeitgeist in the last few years. So call that the capital appreciation, the investability of everything you just described, which is very interesting and nascent and early. Combine that with what I think most people feel they have access to today, which is NFTs. So specifically digital art NFTs. So I'm sure everyone watching this video has heard of Bored Apes and Mutant Apes and CryptoPunks and every possible derivation and spinoff. I think where most folks may feel they're under-indexed is understanding how to sift through the noise for signal, for not only what's interesting and relevant, but also has upside from an investment perspective, and also understanding the risks. So a question to you is, on the one hand, how do you as an investor at Meta4, how do you decipher, and for example, why are Bored Apes valued more highly than CryptoPunks? That tends to be the case. And then specifically, even within Bored Apes, why is one Bored Ape more valuable than the other? Is it, there's a lot of people who zoom out and say, isn't this the greater fool theory game? The classic, you need someone to buy it from you at a higher price in order for it to have value. But I understand that there's intrinsic properties to NFTs that are much deeper than what maybe meet the eye. So,
yeah, it's a tough question because, in many ways with NFTs, you're dealing with part art, part technology. And so the two sort of intertwine. They actually have a very interesting way of kind of, outputting whatever the market dynamics are going to be. So let me start with, I guess, like the last part of your question and then kind of move up. Specific to individual NFTs within a collection, theoretically, the more rare or the more scarce an item is, the more its value will be. So within the Bored Apes collection, for instance, there are only 46 of the gold Bored Apes out of a 10,000 collection, right? So the idea is that if you're part of this sort of, scarce club that is going to end up being worth more, theoretically. But what we actually tend to see in some of our valuation models is there are some aspects or some traits that people just find more attractive. And so maybe it's more liquid or more coveted. For instance, I think the gold grill or the diamond grill for the Bored Ape actually ends up selling pretty well. I think also the ones with the beanie caps, for whatever reason, tend to sell well. The ones with the highest valuation are the gold apes, and then followed by the trippy fur apes. Again, it seems to all be sort of on a line based on a trait score or a rarity score. Viewers who've never kind of encountered NFTs, there are a few resources that they can use. They can go to rarity.tools. This will allow them to look up the ID number of a particular Bored Ape and see how it measures up versus other ones. They can do Rarity Sniper, which allows them to see, again, where it ranks vis-a-vis others in the collection. That's helpful as a barometer, but anyone who's followed like traditional art markets, that it really just depends on, who the buyer is. Somebody actually may think that your ape is worth more than somebody else for whatever reason. They connect with the art. There is a emotional sense with it. When we saw it when Justin Bieber made his purchase, he bought an ape that I think was ranked near the bottom based on rarity score, but he spent $1 million or some odd dollars when theoretically he could have bought it at the floor price, which at the time was only $100,000 or $150,000. So, okay, yes, on the one end he has the capital to do it, but two, for him he wanted that specific ape. He had a connectivity to it. It had the crying eyes, or it symbolized something to him. And in many ways, art is like that, and takes a life of its own, right? So people do this when they collect cars and things like that. If your car gets featured at Pebble Beach or at a show, it may tend to have more value. Same thing for NFTs. If you have one that sort of becomes a meme, if you will, it will tend to have a little bit more value. So, on the individual collection, that's one thing. Now, how you ascribe value to NFTs, sort of, broadly speaking, how do I determine which collections I think are going to be valuable? We've taken the approach that earlier projects, or what are called historical NFTs, will tend to hold more value. So we've looked at it from a retrospective perspective in terms of, these have been around since 2014, but there were only a few projects in those early years, right? In 2021, there were thousands of projects. Everybody was trying to get in on NFTs. But 2014, you barely had Bitcoin. There was a Namecoin fork that had NFTs, and so there were Twitter eggs, there were blockheads, there were puny codes. In 2017, you had CryptoPunks, you had CryptoKitties, you had Mooncats. I say that I can list them off because there are only a handful of these projects. We think over time, 10 years, 20 years down the road, people are going to look back at these original projects that set the standard for where we see art NFTs, collectible NFTs today, and think that they will hold some additional value. And I use the comparison all the time, but it's like having a Jordan rookie card or a Mickey Mantle rookie card. You have something that is extraordinarily rare and unique and particularly scarce because back then they didn't have 10,000 or 20,000 of a particular collection. For the Twitter eggs, for instance, there are only 270 total. So very finite number, incredibly scarce and incredibly unique. So we look for the ones where we connect along a few heuristics. So obviously, I think having a team that is able to deliver on utility or output, whatever they're trying to do across their roadmap, if they're trying to create a game, like we would look at their backgrounds to see that they can actually execute on that, like what makes them specifically positioned well, to do their NFT collection. So team is extraordinarily important. And I say that because, people hear all the time about, scams, or the term that folks use is rug pull, where someone will do a project and then they just kind of they run off with the money after like a month or so. So it's very important that you feel like you can trust the team, that they're great at communicating, great at managing the Discord, they're communicative, they communicate with their community. And then you want to connect with the art. Hopefully there's something that you find that's interesting about it or that's compelling about it. And then obviously looking at scarcity within specific projects. I think that's incredibly important. So we treat it actually like a venture fund would. We look at relative value, we look at transaction history. One of the interesting things with cryptocurrency and with NFTs is you're able to see the provenance of a particular piece. So you see where it's traveled. I'll know if Tom Brady or LeBron owned it.
Right.
I know that Justin Bieber has owned this specific piece. So maybe that holds additional value for me. And so all of that sort of helps to validate what we're doing. And again, I view all of this as a precursor to where NFTs will be in the future in terms of the underlying technology and us owning these sort of digital memberships, digital content, our digital selves, and how we reflect that and represent it. So
I love the description of, it's kind of a dichotomy, right, between there's the art and then there's the technology component. And anyone who's, I've never bought art myself, but I aspire to hopefully be able to buy a piece. I'm a huge fan of various artists, and I think being able to if there's like an affinity, a personal affinity to the art, obviously it's beauty is in the eyes of the beholder, but you mentioned really interesting properties that can't easily be tracked in the offline world. You think about like the art heists of the world. You have no idea if this piece has been stolen at some point in time or owned by a famous celebrity or what have you, but you're able to do that by virtue of it being on the blockchain. Speaking of blockchain, I want to get your thoughts on NFT supporting blockchains that interest you. I mean, we're particularly interested in the ones that go beyond even Ethereum or Solana or Polygon. So talk a little about the underlying technology and where you see the most opportunity or what you find most fascinating.
Yeah, so I mean, I would say that Ethereum is the dominant chain that most NFTs are issued on, followed by Solana. And I think Avalanche has an interesting proposition. I think people, not just in NFTs, they're thinking about how to do this in a more, what do you call it? Carbon neutral way, right? And so like
environmentally friendly.
Exactly. Yeah. So how do we do this where it's cost effective from a gas fee in terms of transferring NFTs, but also that's like good for the environment. And so I do think that there are chains that are going to start sprouting up that do that. Avalanche has communicated an interest in doing it. I believe Tron is trying to do something, but kind of less so. I mean, really it ends up being about the art and the artist at the end of the day. And they ultimately do choose Ethereum because that's where most of the developers are. I think, to some degree there's this Lindy effect where chains that have been around for a longer time that have proven, that they can scale or be sustainable end up being where people want to be. And so I think even, Bitcoin as a first mover is a great example of that. It's a network that's been operating for 10 years uninterrupted. Ethereum, I think by and large, versus these other platforms that may try to do or allow for NFTs, I think they really do have this kind of first mover advantage where everyone knows that their NFT is going to be compatible with different exchanges if they do it on an Ethereum blockchain. So in many ways, if you're doing a collection, you're looking for the most liquidity that there is. But my hope is that it ends up being completely interoperable. We want to enter into a world that you're completely chain agnostic, and I can move my Bored Ape from Ethereum to wherever else that I want to host it, whether it's somewhere else has a game that now I want to use that as my avatar and I can move it into that chain. So I think that may be the ultimate world, but I haven't seen a lot of new layer one chains that seem like they're going to usurp kind of any power from Ethereum, at least at this point. But obviously, this is, like I said, it's very early. I'm sure some genius in his basement is working on it right now. But by and large now, it's still Ethereum, and to a lesser degree Solana, although Solana with Magic Eden's exchange is starting to get a little bit more market share.
I want to touch on the current state of affairs in markets broadly and how that's been impacting crypto and NFT specifically. I mean, we just talked for a moment about the technology aspect. Your team, you have a CTO, you have a data science team that's looking at this. Many retail investors sitting at home are not computer scientists, are not cryptographers, don't understand this stuff at a deep level, but I know are probably interested in understanding, should I be participating? Is now a good time to get involved? I've seen a lot of these NFTs or other projects draw down materially in value. So I'm wondering, zooming out, what's your lay of the land? Like, what's the state of the union you'd give today on crypto broadly, NFTs and Web3 a little bit more specifically, and what sorts of opportunities are more interesting today than maybe they were 6, 9, 12 months ago?
Yeah, it's important to remember, in markets that there's an ability to make money in a good market and in a bad market, right? There are people who are long, there are people who are short. And so like zooming out in a macro perspective, I think we enjoyed, 10 plus years of a bull market. And, unfortunately over the last couple of years, we've been confronted with, I think, an assortment of issues that our government has had to combat, namely COVID and obviously now with, the Russian invasion of Ukraine. So there are many sort of macro factors that I think are driving, I guess what's now being termed a bear market, but sort of the potential onset of a recession. And that has a dramatic impact on risk assets. So we see it affecting technology stocks, and obviously cryptocurrency is no different, right? I mean, I think it's sort of in many ways parallels what happens in traditional tech markets. So certainly, in our space, being able to hedge positions, being able to borrow or lend against NFTs, we try to employ different financialization of products to be able to offset or kind of at least reduce some of the volatility that happens for some of our collection. But it is challenging. I guess what I would say many times for future success, it does depend on market timing. And I would say for anyone that has been interested in NFTs or crypto that have been on the sideline, that your opportunity is coming now, right? We have a very psychological approach to some of this stuff. They call it FOMO or whatever else. So when crypto is doing really well, it seems that people want to invest. So if you were willing to buy Ethereum at 3,000, I don't understand why you wouldn't want to do it at 1,000, other than the fact that you see the price going down.
It's the only store on earth where people want to buy less when things go on sale.
And it's a very, very interesting dynamic. And so I always tell folks, I think the best strategy for someone who is long-term bullish on cryptocurrency and NFTs is to dollar cost average, right? Like you may not be buying all at once, but you're buying at 3,000, buying at 2,000, buying at 1,000. In Bitcoin parlance, they call it stacking sats. Right, so you want to continue to be buying dollar cost averaging, and then over the long haul, over 10 years, if you're patient, it ends up being a nice return. Timing the market is almost impossible, and we certainly don't try to do that. So we have a long-term view that cryptocurrencies and NFTs are going to sort of do outsized returns vis-a-vis traditional markets. We believe that this is a good time to buy, but the cautionary tale there is that we are dealing with a recession. Nobody really knows how this is going to turn out. Me personally, even though I'm fairly young, I have experienced a couple cycles of bull and bear markets. I was in law school during the recession of 2010, so I saw that. I also saw the market plunge, during COVID of March of 2020. So you see these different things happen. You see how the market adjusts and responds to it. And so the government, the Fed, they understand the task at hand here. They know that a lot of money was put in from stimulus checks. They know that they need to get inflation in check. They know that we have supply side constraints. I think all of these problems are solvable. So I think in the short term we will have some pain, but long term I think the upside potential is great. I don't think there's ever been a time, at least in America, where innovation has happened at such a rapid level. We have so much technology at our disposal. We have so many folks who are becoming entrepreneurs and kind of doing their own thing. So I'm very optimistic about the future.
Love it. I want to close up with a segment called Bullish or Bearish. It's pretty simple. It's exactly like it sounds. I'm just going to rattle through a couple things I think are particularly relevant to crypto, Web3, NFTs, maybe some adjacencies, and we'll love your bullish, bearish take, and feel free to maybe a sentence or two, but that's it. Keep it short and sweet. So first and foremost, virtual land.
Virtual land, bullish. Bullish. I'm bullish on virtual land because I think to be able to display, kind of your own sense of style and aesthetic, or having a home that houses all of your digital wares and contents and owning things, you're going to need a place to put that, and it's going to be somewhere outside of your digital wallet. And so I love when I see digital galleries. I love when I see virtual lands where people have games that people can go play on. Yeah, I think that is going to be something that's here to stay. I think in our younger years we had things like Second Life and SimCity and things of that nature, but I think with the continued growth of virtual reality and augmented reality, I think it's going to evolve into something that people actually do want to participate in. So I'm bullish on it. I think I know you said only one line or two lines, but I think it did get a little saturated here. Sort of at the end of last year, there were a bunch of companies that came online, and so when everyone was throwing around the term metaverse, it was like, all right, well, which virtual world do we pick? Is it Sandbox, Decentraland, NFT worlds? I mean, there's dozens of them, right? And so, like, how do we choose which one we need to be in? So I do think the market will kind of pick out a winner from one or a few of those, but long-term bullish for sure.
Okay, interesting. How about Miami?
Miami bullish. Bullish.
Are you a Miami man yourself?
I'm a Texas native from Houston, Texas. And I lived in New York for 10 years. I lived in LA for 2 years. So, I feel like I've covered a lot of ground on the coast. I think Miami, right now, Mayor Francis Suarez, I think he is incredibly progressive in terms of his acceptability of the potential and power of cryptocurrency. I think he's very open to entrepreneurship, has been very heavy in recruiting venture capitalists. I think he's brought in a lot of new technological brain power for people who are interested in being hired by tech companies. So whereas I think Miami, I would just go for spring break in the past, now it's become, I think, a place where most people view it as a potential destination to be hired and work. So I think the tax regime is much more favorable. So I think it's comparable to if you were going to move and live in Austin. It's just an attractive place to be for a lot of reasons, weather, tax, progressive mayor, technologically. And so bullish on Miami for sure.
Okay, cool. Dogecoin?
Dogecoin. I don't want to sound like a maxi. I'm neutral. Okay. I'm neutral. I think.
You're on the sidelines. Too hard pile.
if I had to choose, I would say bearish. I mean, I think it's a coin. It is effectively to me a meme. It's like people are pumping it up, but it is a chain that doesn't do anything, right? So obviously, I think Elon Musk finds it funny, and he kind of tweets about it here and there. And there's certainly lots of folks who own it. But I don't know many people who transact in Dogecoin. But I'm optimistic. I appreciate the role that it has had in bringing your kind of average consumer to the space, whether it was just because of the excitement of speculative nature of what the coin can do, but in terms of development and people who are contributing code on GitHub and what it's doing to advance within the industry, I wouldn't put it in like my top 5 list of coins.
Makes sense. How about Bitcoin as an official government currency? So not as an investable asset or digital gold or hedge, but medium of exchange.
I'm bullish and bearish. I am bullish that I think that we are entering into a trend where us as individuals, we realize that there's something not totally right about the way that our global infrastructure and economy is working, where the Fed or whoever can kind of print out dollars sort of at a whim. And I think there's a non-zero chance that Bitcoin becomes the next world reserve currency. So as we've moved from shells to gold to the dollar standard, I would not be surprised that as we move to this sort of global frictionless world, that Bitcoin is sort of the next denomination. I am bearish because I think that the governments will fight against that. And particularly, I think the United States will, if not try to create their own cryptocurrency to kind of offset it, I do think that they will make it challenging from a regulatory standpoint for it to be recognized as a currency. But, we'll kind of see how that plays out. It may not happen in my lifetime, but I do think that there will be a new standard, and Bitcoin is establishing itself as a potential suitor to that.
This is a little bit more contrarian one, but Meta platforms, so formerly Facebook. The stock has, I think, off 50% from highs, if not more. Primarily our views on the basis of having made these tens of billions of dollars of capital commitments to invest in the metaverse, which some may say, oh, it's a science, the old curmudgeon value investors may say, oh, this is a science project, it's unproven, he should be buying back stock, returning capital to shareholders. Curious your take, with a caveat, obviously not investment advice.
I'm bullish on Meta and their investments that they've made in the space. I think obviously they did really well with their investments with WhatsApp, with Instagram. I think there's some sort of an identity crisis there a little bit. And again, it's the same thing. If you're like into music, you want Drake to continue to put out the same music that you liked before. Well, Facebook also needs to grow, and I don't know all their numbers around advertisement and users and what's happening, but I do think it's very astute of them to kind of realize that this is going to be the next frontier. And I think vis-a-vis their other competitors, whether that be Google, whether that be Amazon, whether that be sort of anyone in that kind of FANG slot. I think that they are going to do really well long term as a result of this investment. So whether that be from hardware, doing the devices, whether that be with avatars and enabling people to do their virtual ownership NFTs with Instagram, I think all of it, when they put together a cohesive package, I do think it will be well recognized by the market. And again, if Mark is true to his sort of original view in terms of Facebook being the glue or connector for everyone in the world, then this has to be the pivot for them. Because I do think that again, blockchain technology in a decentralized world and allowing users to own their content, I think that's the best path forward. So I'm excited to see what they do. You can't build Rome in a day, and it's going to take them some time to flush all this out. Hopefully that they're not so insulated in their own bubble that they don't listen to how consumers react to different things. And the internet is pretty unforgiving. When you put out an avatar that looks dumb, they'll let you know about it. And so hopefully someone internally is able to say, hey, listen, I think we should move another way. But very bullish on Meta investing in the metaverse.
Okay, I like it. Maybe to wrap up, coming full circle, like truly physical art. I'm curious to get your take. We haven't talked about it much, but not many folks have talked about digital art possibly disrupting or displacing physical art. Curious, is it positive sum? Like old school physical art not going away? This is just a supplement, a new paradigm?
I don't think it's going away. And I say that for a couple of reasons. One, listen, there's nothing that will replace the craftsmanship that comes from somebody that is either able to paint or draw or sculpt or do things with their hand, like that sort of that tangible mastery of a craft, right? That's what you're actually paying for. So I love going to museums and seeing ancient works. We're just like, man, this is incredible. So I don't think that's going anywhere, and the market suggests that as well, as sort of traditional art markets continue to be an inflationary hedge. If you're watching the Sotheby's and Christie's auctions, some of these pieces are going for exorbitant amounts. I think a Rothko went for $80 million, and I think the Marilyn Monroe Warhol, I think set a record at $150 or $180 million. So, those markets will continue to do well. I don't think that NFTs are something that are just going to make physical art go away. If anything, I think they'll be complementary. I think artists will learn how to use blockchain and NFTs to their benefit, whether that enables you to have a mint pass to buy some of their work, whether that is you have to burn a token for you to get the physical work, which Damien Hirst has done with currency. I think it's going to be complementary. I view the blockchain and NFTs for artists specifically as just a new medium for them to explore. If I was Basquiat and I came and I'm, here we are 2022, I would want to create art on the blockchain because now it's something that can evolve with different inputs. There's an artist by the name of Matt Cain who did a piece called The Gazers, and his work evolves sort of on a daily basis based on the moon and how it's shifting. So to be able to do kind of interesting things like that should be compelling to most artists. But I think right now many are probably afraid of the technology, and I guess sort of what what that does to their brand, right? Like if I'm a top billing artist and now I'm going with a fad to do NFTs, I think I think there's some sort of tinge against that now, but that will surely change throughout the next couple of years.
Fantastic. It's a great way to wrap up.
Yeah.
Brandon, thank you for joining us.
Yeah,
This is Brandon Buchanan. He's the founder of Meta4 Capital, which is a leading NFT investment fund. Thanks for being with us.
Thanks for having me.